All right, let's jump into this deep dive into Rich Dad, Poor Dad by Robert Kiyosaki. This book, it's really made some waves, with its take on money and building wealth and all. So today, we're going to break down some of those key lessons, almost like we're making a cheat sheet for financial literacy.
Yeah, I think one of the things that makes this book so interesting is Kiyosaki uses his own story, like
Mm.
his personal experience, to illustrate these financial lessons. He compares the advice he got from his own father to the advice he got from his friend's father.
Yeah, I love that two dads concept. It's so interesting. His biological dad, the poor dad, he was all about getting a good education
Right.
and then getting a secure job.
Hmm.
But his friend's dad, the rich dad, he was a self-made entrepreneur. Totally different outlook.
Yeah, totally. Rich Dad was all about building assets, things that actually put money in your pocket, not just working for a paycheck. And that's where that famous lesson comes in. Work to learn, don't work for money.
Right, and he put that lesson to the test when Kiyosaki was just 9 years old, making him work for just 10 cents an hour. I mean, looking back, that seems kind of harsh, but there was a bigger lesson there.
Oh, yeah, absolutely. I mean, it might have seemed like exploitation at the time, but Rich Dad was subtly teaching Kiyosaki about having money work for you, rather than you constantly trading your time for money.
And that actually leads us into one of the core concepts
Yeah.
of this book. It's this whole idea of assets versus liabilities, where we're trying to learn those definitions in accounting class.
Oh, yeah, Matt. Well, Rich Dad simplifies it. An asset puts money in your pocket. A liability takes money out of your pocket.
So simple, but.
Mm.
And then he challenges this traditional idea that your house is an asset. He's actually arguing that for most people, it's actually a liability because of all the ongoing expenses that come with owning a house.
Yeah.
And he uses these things called cash flow diagrams to illustrate this.
Oh, yeah, those are really helpful. Think of a cash flow diagram like a map of your money. It visually shows you how money flows in and out, connected to specific things, your income, your house, your car, everything. And Kiyosaki uses those diagrams to show how owning a house can actually drain your finances.
It really makes you think twice about all these assumptions we have about owning a home
Yeah.
and financial security.
Yeah, for sure. It makes you ask yourself, are you building up a solid base of assets that are actually generating income? Or are you just piling up liabilities that are eating away at all your resources?
Right. So how do we actually
Yeah.
build that asset column then? Kiyosaki, his answer is mind your own business. But he's not just talking about starting a company, is he?
No, he's got a broader perspective. He uses the example of Ray Kroc, the
No.
founder of McDonald's. Ray Kroc has actually said. His real business wasn't hamburgers, it was real estate, the land that his franchises are built on. So it's all about strategically building a portfolio, right?
Yeah.
Whether it's through real estate or stocks or even starting a business.
But he's also really clear that you can't do any of this without financial literacy.
Oh, yeah, that's key.
You have to know how to analyze investments and manage cash flow, right?
Absolutely. It's like, financial literacy is the foundation of the house. It's the ability to make sense of financial information and understand what those numbers are telling you.
And speaking of understanding the rules of the game, Kiyosaki, uh, he drops a bit of a bombshell about the power of corporations. He talks about how the tax system has evolved. It's really eye-opening.
Yeah, he dives into the history of taxes and explains how they were initially meant to target the wealthy, but over time, they've kind of trickled down to impact the middle class more and more. And Kiyosaki, he reveals how corporations, they offer these legal tax advantages, right? And asset protection that individuals often miss out on.
Yeah, like corporations can deduct their expenses before paying taxes, which is something individuals can't do. It really highlights how the playing field it isn't really level.
Yeah, and it makes you wonder, right? Are you taking advantage of the legal structures and strategies that could help you build and protect your wealth? Or are you playing by a set of rules that are actually keeping you stuck in the rat race?
It's a good point, and that brings us to another intriguing idea from the book, The Rich Invent Money. And he's not talking about, printing cash in your basement.
Oh, no, not at all.
He's talking about recognizing opportunities that other people just completely miss.
Yeah.
And having the financial intelligence to actually act on them.
Right, think about Alexander Graham Bell. He tried to sell his telephone patent to Western Union for $100,000, and they turned him down. They said the idea was ridiculous.
Yeah.
Totally missed out on a multi-billion-dollar industry.
Wow. And Kiyosaki, he also shares his own experiences, like buying houses
Yeah.
at these foreclosure auctions for a fraction of their value.
Oh, yeah, those can be great
It
deals.
shows how money can be invented
Mm.
by spotting value that others don't see.
It's all about developing that financial intuition, right? Being able to see potential in situations that others might just overlook, especially when the economy is maybe going through a rough patch. Be bold. Think outside the box. Don't let fear and doubt hold you back.
But even with financial literacy and a good eye for opportunities,
Yeah.
there are still these internal roadblocks that can hold us back, right?
Yeah.
Kiyosaki identifies 5 of them.
Yeah, he calls them the 5 roadblocks to wealth: fear, cynicism, laziness, bad habits, and arrogance. These are the things that can trip up even the most financially savvy people.
I think we all struggle with at least one of those. Let's unpack them a little bit, starting with fear. Kiyosaki says most people are just terrified of losing money. And that fear, it keeps them from taking risks. They'd rather play it safe than potentially lose anything.
Yeah, he talks about how important it is to learn to handle risk and even failure. He says that winners are actually inspired by failure, while losers are defeated by it. He even uses the example of the Alamo, where these brave individuals chose to fight, even though they knew they were likely to lose. It's about having that courage to face your fears and take calculated risks, even if it means experiencing some setbacks along the way.
He also talks about how cynicism can be a major roadblock. Cynics, they tend to focus on the negative, right? They always see why things won't work, rather than exploring the possibility.
Right, he shares a story about a friend of his who was constantly negative about real estate investing, always finding reasons why a deal wouldn't work or why it was too risky. His cynicism blinded him to the potential opportunities that were right there in front of him.
And Kiyosaki argues that that cynicism can actually be expensive
Mm-hmm.
because it prevents you from taking advantage of potentially profitable situations. He encourages us to be analytical, not just critical. Look for the potential upside, not just the potential downsides.
And surround yourself with people who support your goals, not those who constantly feed your doubts and fears.
And then there's laziness. Okay, we're all guilty of this one sometimes. Kiyosaki says laziness often disguises itself as busyness. We tell ourselves we're just too busy to learn about investing or to take action, but really it's just procrastination.
He points out that lazy people, they often hope for something for nothing. They want a quick and easy path to riches without putting in the effort to develop their financial intelligence.
And he connects that laziness back to fear and doubt. Like we might avoid taking action because we're afraid of making mistakes or we don't believe we can actually succeed. So it's about overcoming those mental hurdles, right? And taking those first steps, even if they seem small.
He encourages us to combat laziness by focusing on our wants and our don't wants. What do you truly desire in life, and what are you willing to do to achieve it? Having a clear vision of your goals and what you want to avoid can be incredibly motivating.
Bad habits can also be a major obstacle on the road to financial freedom. Kiyosaki argues that we all have financial habits, but some of them are holding us back, like spending more than we earn or neglecting to save regularly.
He emphasizes the importance of developing positive financial habits, such as paying yourself first, living below your means, and investing consistently.
And he points out the hypocrisy of people who say pay yourself first, but then they don't actually do it. Their expenses consume all of their income, leaving nothing left over for investing.
Yeah, it's about building that discipline, right? Controlling your spending and investing regularly, even when it's not easy. Make your financial future a priority, not an afterthought.
And finally, Kiyosaki tackles the roadblock of arrogance. He suggests that arrogance is often a mask for ignorance. Arrogant people think they know everything. They're not open to learning new things.
He explains how arrogance can actually lead to financial losses because it prevents people from seeking advice or acknowledging their own mistakes. They become blind to their own blind spots.
So he encourages us to be humble, right?
Mm-hmm.
And always eager to learn. True intelligence is being open to new ideas and new perspectives and constantly seeking to expand your knowledge and your understanding.
He also warns against confusing knowledge with intelligence. Just because you've read a book or attended a seminar doesn't mean you're financially intelligent, right? You need to be able to apply what you've learned and adapt to ever-changing circumstances, turn knowledge into action, constantly refine your strategies.
So we've identified these roadblocks, but how do we actually overcome them? What are some concrete steps we can take to start building our own asset columns?
Well, Kiyosaki outlines 10 key to-dos to get started. These are practical tips that anyone can implement. Regardless of their current financial situation, they're like a roadmap to financial empowerment.
Okay, I'm ready to get tactical. What's the first step on this roadmap? All right, let's get into those 10 to-dos Kiyosaki lays out. They sound like a really practical guide to building wealth,
Yeah, for sure.
something we can all use.
The first one is all about finding your why, your driving force. He says, find a reason greater than reality. Define your wants and don't wants to fuel motivation.
So basically, you need a really strong reason behind your financial goals. What do you want to achieve, right? But also, what are you trying to avoid? Sometimes I think those don't wants can be even more powerful motivators.
Totally. He actually shares his own don't wants in the book, like working tirelessly his whole life, being stuck in a job he hated, ending up financially dependent like his biological father. Those fears, they fueled his desire to create a different path for himself.
So it's not just about what you want, but what you absolutely don't want. That leads us to do number 2. Choose daily. Every dollar spent is a vote for wealth, poverty, or the middle class. Sounds like he's saying even small choices matter.
That's it. Every time we spend money, we're essentially casting a vote for the kind of financial future we're creating. Are we investing in assets that will generate income and build wealth? Or are we adding to our liabilities and expenses? It's a powerful way to look at our daily spending habits.
Oh, totally. I'm so guilty of those impulse purchases. Like you see a cute pair of shoes and boom, there goes my vote for financial freedom.
But it's true, those small, seemingly insignificant choices, they can really add up over time.
They do.
And that's where financial literacy comes in, being able to recognize the difference between an asset and a liability, making conscious choices.
Informed decisions about where your money's going.
Exactly.
Okay, next step is to-do number 3. Choose friends carefully. Surround yourself with people who support your financial goals, not chicken littles. This one's all about the company we keep.
Yeah, Kiyosaki really stresses the power of our social circles. The people we spend time with, they have a huge influence on our thoughts and beliefs and our actions. If you're constantly around people who are negative about money, or they believe that getting rich is impossible, it's going to be a lot harder for you to stay motivated and achieve your own goals.
He compares those naysayers to Chicken Little, always running around shouting, "The sky is falling!" I know a few people like that,
We all do.
always focusing on the negative,
Right.
predicting doom and gloom.
He suggests surrounding yourself with people who are financially successful, people who can offer support and guidance on your wealth-building journey. Their positive energy and advice can make a huge difference.
To-do number 4 is all about lifelong learning. Master a formula and then learn a new one. Continuously expand your financial knowledge and skills. Never stop learning, right?
The financial world is always changing, right? New strategies emerge, markets go up and down, technology disrupts everything. It's so crucial to keep learning and expanding your knowledge and skills.
I love the analogy he uses. He compares financial formulas to recipes. Just like a baker needs to follow a recipe. To bake a loaf of bread, investors need to master certain proven formulas. For building wealth,
Yeah, but he stresses that you shouldn't just stop at mastering one formula. Keep learning new ones. He talks about how he spent 3 years learning how to buy foreclosed properties. That formula earned him millions of dollars. But he didn't stop there. He kept going. He learned about options trading, real estate development, always adding new tools to his financial toolbox.
so find those proven strategies, but also be adaptable. Be open to learning new things, especially in today's world. The ability to learn quickly is so valuable.
The faster you can learn, the more opportunities you'll be able to seize.
To-do number 5 is a classic. Pay yourself first. Develop the discipline to invest before paying bills. Sounds simple enough, but I bet it's a lot harder to actually put into practice.
It is. We're so used to paying our bills first, right, and then seeing what's left over. Kiyosaki challenges us to completely flip that script. Pay yourself first, even if it's just a small amount, and then figure out the rest.
It's a real mindset shift.
It is.
He's not just talking about setting aside money for a rainy day.
No, he's talking about building the habit of prioritizing your financial future.
Okay, I'm seeing a theme here. It's a lot about mindset and discipline.
For sure.
It's easy to say, pay yourself first. But when those bills are staring you down, it takes willpower to actually do it.
It does. He actually shares a story about facing pressure from his accountant and his bookkeeper. They were urging him to pay his bills first, but he stuck to his guns. He knew that paying himself first, even when it was tough, was the key to achieving long-term financial stability.
It's about having that long-term vision
Yeah.
and sticking to your plan, even when it's tempting to deviate. To-do number 6 might seem a little counterintuitive. especially if you're on a tight budget. Pay your brokers well. Seek out and reward experts who can accelerate your success. Wait a minute. Shouldn't we be trying to save money?
Yeah, it seems counterintuitive, but Kiyosaki argues that investing in expert advice can actually save you money in the long run and generate greater returns.
So be strategic with your spending. Don't see it as an expense. See it as an investment in your future.
That's it. He also emphasizes the importance of finding brokers who genuinely have your best interests in mind, not just those who are trying to earn a commission.
How do you find those trustworthy brokers? Are there any red flags we should be looking for?
He suggests looking for brokers who invest in their own businesses and have a proven track record of success. They're more likely to understand your goals and actually help you achieve them.
Makes sense. To-do number 7 sounds fun. Be an Indian giver. Leverage assets to get something for nothing, like Kiyosaki's example of the free condo. Sounds like he's talking about finding those creative ways to make deals work in your favor.
Exactly. Kiyosaki is all about creative financing and leveraging assets to create win-win situations. He tells this great story about buying a condo with no money down. He secured the property with a short-term loan and immediately rented it out. The rental income covered the loan payments, so he basically owned the condo for free.
That's incredible, but I'm guessing it takes some expertise to pull off deals like that.
It does, but it shows the importance of thinking outside the box. Don't limit yourself to traditional bank loans. Explore things like seller financing, lease options, partnerships. Get creative.
To-do number 8 is about shifting your spending habits. Assets buy luxuries. Delay gratification until your assets can fund your desired lifestyle. So hold off on the big purchases until you can truly afford them.
He points out that poor and middle-class people, they tend to buy luxuries first, often going into debt to do it. But rich people buy luxuries last. After their assets have already generated enough income to cover the cost, they let their money work for them. And then they reap the rewards.
He gives the example of his wife buying a Mercedes. She didn't buy it with her own money,
Mm.
didn't go into debt. She bought it with the income from their rental properties.
It's about delaying gratification and building up that asset column first. Once your assets are generating enough income, you can enjoy those luxuries without relying on debt or sacrificing your financial future.
Play the long game.
Exactly.
Build a solid foundation, and then reap the rewards later.
It's a more sustainable approach to building wealth.
To-do number 9. Choose heroes. Model yourself after successful investors and entrepreneurs. We all need someone to look up to, don't we?
Absolutely.
Someone who inspires us.
Kiyosaki believes that heroes make things seem possible when you see someone else achieving what you aspire to. It reinforces your belief that you can do it too.
He talks about how he used to idolize baseball players, like Willie Mays and Hank Aaron. He knew everything about them.
It's about finding those figures who embody the qualities you admire and inspire you to be your best.
And then as an adult, his heroes shifted to successful investors like Warren Buffett and Peter Lynch. He studied their strategies and their philosophies.
Find those mentors, right? Whether it's through their books or their teachings, who can guide you?
It's amazing how powerful role models can be.
They can make a huge difference.
And finally, we have to-do number 10. Teach and you shall receive. Sharing knowledge attracts opportunities and abundance. This one seems to be about generosity.
Kiyosaki's rich dad, he believed that teaching was one of the best ways to solidify your own learning. When you teach something, you have to really understand it. And when you share your knowledge, it often comes back to you in unexpected ways.
The more you give, the more you receive.
Right. But it's not just about material rewards. It's about creating that positive energy, attracting opportunities and good fortune.
He tells a story about a time when he was struggling financially. But instead of dwelling on it, he decided to give what he desired. He donated to a charity. And shortly after, he received an unexpected windfall.
It's about shifting your mindset from scarcity to abundance. Giving can actually be a catalyst for receiving.
Create a win-win situation.
Exactly.
You help others, but you also open yourself up to new possibilities.
He encourages us to be givers, not takers. When you focus on helping others, you create a ripple effect of generosity and abundance.
So these 10 to-dos are really about taking control of your financial destiny. It's not about get-rich-quick schemes. It's about developing financial literacy, cultivating good habits, and making choices that align with your long-term goals.
It's a journey, not a destination.
Right.
It's about shifting your perspective from scarcity to abundance, realizing that opportunities are all around us if we're open to seeing them, and taking action. You have the power to create the financial future you desire.
These 10 to-dos are incredible, like a mini course in financial empowerment. But Kiyosaki doesn't stop there. He actually provides even more specific steps in the book.
Oh yeah, he gives practical advice on how to get started with investing, even if you don't have a lot of money or experience.
And that's what we'll cover in part 3. Get ready for a masterclass in real estate investing and wealth building strategies. We'll be right back after a quick break. All right, welcome back to the final part of our deep dive into Rich Dad, Poor Dad. We've covered so much ground, from financial literacy to those 5 roadblocks that hold us back. But now, let's get tactical, right? What are some specific strategies we can use to actually start building our asset columns?
Well, Kiyosaki, he really delivers in this area, especially when it comes to real estate investing. He walks us through his own experiences, the deals he made, the strategies, the lessons he learned. It's like we're getting this behind-the-scenes look at how he achieved success.
Yeah, he's not just talking theory here. He's actually been doing this for decades. He's sharing those hard-won insights.
Right. One of the big takeaways is anyone can become a successful real estate investor. It's not about starting with a ton of money. It's about having the right knowledge, being creative, and taking action.
It sounds so simple when he explains it, but I imagine it still takes a lot of work and know how to make it happen.
It does, but he breaks it down in a way that makes it feel achievable. He focuses on finding bargains, negotiating effectively, and managing properties smartly to make sure you're generating positive cash flow.
Okay, so where do we even begin? How do you find those hidden gems?
He suggests starting by looking for undervalued properties. Those could be properties that need some work, you know? Or maybe the seller needs to sell quickly. Think like a detective. Spot those opportunities others miss.
Be a bit of a sleuth.
Exactly. He even says, take walks or drives through neighborhoods you're interested in. Look for signs of change. Are there properties that have been on the market forever? Are there a lot of moving trucks? Those could be signs of potential deals.
Be observant. Notice the little things that other people might not pick up on. And then, once you've spotted something promising, what's next?
You really got to understand the local market. What types of properties are in high demand? What are the rental rates like? Are there any new developments planned? Anything that could impact property value?
Do your homework.
Yeah.
Research the area. Understand how the market works.
He even suggests talking to local real estate agents, property managers, other investors. Get their insights.
The more you know, the better.
Right, the more confident you'll feel making decisions.
But let's say you found a property. That seems like a good deal. What about making an offer? That part can be kind of scary.
Kiyosaki encourages us to be bold. Make offers, even if they're below the asking price. You never know what a seller might accept, especially if they're motivated. The worst they can say is no, right?
That's true. It's easy to overthink it.
And you miss out on opportunities.
You got to just go for it.
He also says, be prepared to walk away if the deal's not right. Don't get emotionally attached. Stick to your budget, stick to your criteria, and be willing to walk away.
That takes discipline.
It does.
It's easy to get caught up in the excitement, but you got to stay rational. So let's talk about financing. Kiyosaki, he's not a big fan of those traditional bank loans, is he?
No, he prefers those creative approaches. Seller financing, lease options, partnerships. Those strategies let you acquire properties with little to no money down.
Reducing your initial investment.
Right, and potentially increasing your returns.
He even shares a story about buying a house for $50,000 with only $5,000 down.
Yeah, he used a combination of seller financing and a short-term loan to close the deal. And then he quickly turned that property into a rental.
That's amazing. It shows it's possible.
Even if you don't have a lot of money to start with.
But once you have a property, the work doesn't stop there, does it?
No, you got to know how to manage it. Find good tenants, maintain the property, keep those expenses under control. Real estate is a business, treat it like one.
Be involved, make sure things are running smoothly.
He also talks about the long-term potential. You know, the appreciation of your investments, cash flow is important, but also think about how the value of the property might go up over time.
You're building wealth for the future.
Exactly. That's where understanding market trends comes in. Choosing properties in the right locations.
Think strategically, make smart choices. So as we wrap up this deep dive, what's the key message you hope listeners take away from Rich Dad, Poor Dad?
I think Kiyosaki's message is one of empowerment. He's saying, financial freedom is possible. It takes a shift in mindset, a commitment to learning, and a willingness to take action.
Question those old ideas about money. Awaken your financial genius Make money work for you.
Take control of your finances. Build your financial literacy. Invest in those income-generating
It's
assets.
a journey, right?
It is.
There will be challenges. But with persistence and determination, anyone can achieve their financial dreams.
And as we wrap up, we'll leave you with this thought. What's one small step you can take today to start building your asset column?
Maybe pick up a book on real estate, attend a seminar, talk to a financial advisor. Whatever it is, take that first step. Your future self will thank you.
Share your thoughts with us. On social media, use the show's hashtag. We love hearing from you.
Until next time, keep learning, keep growing, and keep diving deep.